Ever pondered how the stock market, this vast financial ecosystem, came into existence? The journey begins in the 17th century, in the bustling city of Amsterdam. Dutch merchants embarking on daring voyages to the far corners of the world needed funds. To raise this capital, they started selling shares of their expeditions to willing investors. This innovative practice, a precursor to modern-day stock trading, took place in a location that came to be known as the stock market. As centuries rolled by, this concept evolved. Companies started issuing shares, not for singular voyages, but for their entire operations. Investors bought these shares, essentially buying a piece of these companies, and shared in their successes and failures. This laid the foundation for the modern stock market, a dynamic marketplace where shares of companies are bought and sold. So, the bustling stock market we see today has its roots in the ancient trading practices of the Dutch. Now you're probably wondering, what exactly is traded on this market? Well, think of the stock market as a giant supermarket, where the goods on the shelves are pieces of companies, known as stocks or shares. When companies want to raise money, they can issue these shares. Buying a share means you're buying a tiny slice of that company's pie. You become a part owner, and as such, you may even receive a portion of the company's profits, known as dividends. But stocks aren't the only thing trading on this market. There are bonds, which are essentially loans you give to companies or governments in exchange for regular interest payments. And then there are derivatives, complex financial instruments whose value is based on an underlying asset, like a stock, bond, or commodity. So, in a nutshell, the stock market is a bustling marketplace where you can buy and sell pieces of companies. It's like an economic engine, driving growth and prosperity. In essence, the stock market is a marketplace for buying and selling pieces of companies. But what prompts these companies to go public and list their shares on the stock market, you may wonder? Well, one primary reason is to raise capital. When a company goes public, it sells parts of its ownership in the form of shares to public investors. This allows the company to gather significant funds, which can be used for expansion, research and development, or to pay off debts. Additionally, going public provides liquidity. This means the original investors, often the founders or early backers, can now sell their shares easily and convert them into cash whenever they want. However, it's not all sunshine and rainbows. Going public also means loss of control. The company's decisions now have to cater to the interests of numerous shareholders. Plus, there's increased scrutiny. Every financial detail, every hiccup, every success is under the public eye, and that can be quite stressful. It's a trade-off. Companies gain the ability to raise funds, but they also open themselves to public scrutiny and accountability. So how can we as individuals benefit from this market? Well, the stock market isn't just a playground for corporations. It's also a platform where individuals can invest and potentially expand their wealth over time. When you buy a company's stock, you're essentially buying a piece of that company, betting on its future success. Now, the stock market can offer high returns, but it's not without its risks. Stocks fluctuate in value, and there's always the possibility of losing your investment. That's why it's essential to make informed decisions. Researching companies, understanding market trends, and even seeking advice from financial advisors can all be part of a smart investment strategy. But remember, investing isn't about getting rich quick. It's about building wealth over the long term. While the stock market presents opportunities for wealth creation, it's crucial to remember that it also carries risks. So invest wisely and always be mindful of your financial security. Before we wrap up, here's an important word of caution. While we've been discussing the ins and outs of the stock market, it's crucial to remember that this video should not be taken as investment advice. The stock market is an intricate web of possibilities, filled with both opportunities and pitfalls. Each investment decision should be backed by thorough personal research, a sound understanding of market dynamics, and, if possible, professional advice. It's essential to be aware that investing in the stock market involves a degree of risk. The value of stocks can fluctuate, sometimes dramatically, and there's always the chance of losing some or even all of your investment. However, with proper planning, careful analysis, and a measured approach, it's possible to navigate these risks and potentially reap substantial rewards. Remember, When it comes to the stock market, you're the one in charge of your money. Make informed decisions and invest wisely.